Heath Grossman here for Money Wisdom Question Series. Today's question is in regards to long-term care, and accordingly so, November is long-term care month. But this conversation and this decision around whether or not someone should get some type of long-term care insurance is certainly not an easy one. So some things to think about. Number one is you really have to think about and frame up this conversation and this discussion or this decision in regards to protecting and preserving the assets, right? It's not about getting cared for, right? If someone decides to get some type of long-term care insurance, they're getting it because they want to protect the assets for maybe another spouse that's still at home, or ultimately to pass on to their kids or other people that they love or care about, or organization. So again, this conversation is around protecting and preserving the assets. Now, if someone does go down the road of getting some type of long-term care insurance, there's your traditional long-term care insurance, which has been around for years and is kind of like your car insurance, right? Like you have coverage. If you need it, if you get into an accident, or if you need to go on claim with that long-term care insurance, it's going to be there to the degree that you have the coverage, right? But if you ultimately don't need it, right? If you don't get into an accident, your car insurance doesn't give you anything. In same respect with long-term care insurance. If you live your life and don't end up going into a nursing home or requiring that level of care, your long-term care insurance doesn't give you anything, right? So that's why it ends up being a very difficult decision, because you may not end up getting anything for the policy. Over the years, they've developed newer types of policies, which I would call more of like a long-term care life insurance hybrid, right? Where you have the coverage for long-term care, but if you end up not needing it, if you ultimately pass away someday, you get some or most of that money back. The heirs, the beneficiaries, get that money back. Some other people will take a different approach, right? They'll just, instead of giving that money to an insurance company via an insurance policy, they'll just take that money that they would have put into the policy and sort of earmark it off to the side and invest it and grow it. And they've sort of, reserved or earmarked this money for their long-term care insurance if they ultimately need it, right? That way, if you need it, it's there for you. If you don't end up needing it, it's just another piece of the money that goes on to your kids or other people that you care for. So once again, this is Heath Grossman for Money Wisdom Question Series. Hopefully you enjoyed this video. If you did, give us a like and share it with your friends.